Welcome to the VantagePoint series, Getting the Most Out of VantagePoint Indicators, Predicted MACD. Predicted moving average convergence divergence is one way to use moving averages to forecast trend changes. The movement of the two lines relative to each other indicates trend strength. The most important clue comes from the crossovers of the two lines. The indicator is predictive 1 day ahead. Predicted MACD reflects the difference between two predicted EMAs, the exponential moving averages. The VantagePoint default is 20-day and 10-day exponential moving averages. The traditional is more likely to be 26-day and 12-day exponential moving averages. The trigger line is the blue line that you see on the screen here. That is a 9-day exponential moving average of the MACD values. These lines converge and diverge, and that's where the name of the indicator comes from. They come together, pull apart as the trend strength changes. Predicted MACD provides several different types of clues to the trader. The first one you want to look at is the angle or the direction of the MACD and trigger lines. If they're pointed up, indicates the market is getting stronger. If they're pointed down, indicates the market tends to get weaker. The important point on the line is where the crossovers occur. As you see here where I'm pointing, when the predicted MACD line, the black line, moves above the trigger line, the blue line, that suggests direction. When MACD crosses below the trigger, a downtrend is forecast. When MACD crosses above the trigger, an uptrend is forecast. What is important also is the relationship to this zero line. The zero line is kind of the dividing line between weakness and strength. If the line crosses over the zero line, as it does here, that is more of a confirmation factor. We know that we have the market moving up, MACD moving up. That crossing of the zero line is confirming the strength that the market is likely to continue trending higher. An important factor also in the MACD study, as it is with many of the other indicators, is a concept called divergence. Price moves up, makes first a high here and a higher high here. But when you look at the MACD indicator down below, you'll find that the trend is moving down, where the second high is lower than the first high. The significance of that is that in most cases the indicator is going to give you a good indication of what the future trend is going to be, and that sometimes prices move above and beyond where you might expect them to be. The indicator has already caught that underlying weakness or possible trend change. One of the things that is very useful for traders sometimes is to put several indicators together. In most cases, you will not trade MACD as an indicator alone. You will not trade any other indicator alone, but it is in combination with several different indicators. One that is used by several traders is that the predicted medium-term and long-term differences that you find in VantagePoint can be used to compare what the turns are in MACD. You will notice here where the turn is made here, that the turn has already been made in the predicted differences right here, where the predicted medium term, the pink line, has moved above the predicted long-term difference line, the dark blue line. You will notice also in several other occasions here, if you'll follow here, where the turn already has been made by the predicted difference line prior to the MACD line. In some cases, the MACD line in a strong trending situation will go sideways and will not provide a valid signal for some period of time. Now let's review some of the key features of the predicted MACD indicator. First and most important, it forecasts trend changes and corroborates what you see with other indicators by using moving averages in a different way. Monitoring the action of these two lines, that is the predicted MACD line and the trigger line, relative to each other, and the angle of those lines provide early clues about trend strengthening or weakening. One of the key points is the crossover, where you get a clue that the market trend may be changing, confirmed by crossing of the zero line, either above or below the zero line. Important indicator with MACD as well as with other indicators is divergence from price, which indicates the longer term trend direction sometimes much more clearly than the price action itself. And finally, predicted MACD should be used in conjunction with other indicators and not in isolation in determining your trading decisions. Thank you for watching this session. Please visit the Market Technologies Learning Center for additional tutorials.